Welcome. This is Bitcoin Day Trading, the best Elliott wave analysis, episode number 26. Today, we are going to take a look at the charts as always, but I want to explain something to you. So we'll take a look at the whiteboard also. And since yesterday, my outlook did change again. So yesterday I was looking out for a double zigzag, and we only did get a zigzag. And I want to explain to you what a zigzag and a double zigzag is, or a triple zigzag. And to do that, I will show you a whiteboard. But first, I have to show you my disclaimer so that you are aware that trading involves risks. So please read the disclaimer and read also my risk warning. And if you need some help with trading, let's say swing trading or day trading, what we are doing on this channel, you can always reach out to me. I do one-on-one coaching, and I have a 60% discount right now if you're interested. You can also talk about investing, of course. If we talk about investing, we discuss the eventuality of investing in Bitcoin, we would take a look at the higher time frame to see where you are and what you can expect over the long term. On this channel, I don't do this because I'm only focused on day trading. But there's no problem for me talking about swing trading or investing if you're interested in that. Now, that being said, I want to share with you my whiteboard and explain what I did right on my whiteboard. So let me put my head down here so you can see what is written on my whiteboard. So I can't put it in red because the color is only black, I think. I could, but it would mess the whiteboard up. It would get really messy if I did. So let's stay with black simply. So the first thing you see is a down, up, down. I hope you can see that in my cursor. But it's the first pattern you see. It's a down, up, down. And you can see that the pattern did not go as high as the starting point. The B wave retracement did not go as high as the starting point because the first pattern is an A, B, C. I'm not putting it on because if I put too much stuff on the chart, it will get messy. So that's a simple zigzag, okay? And now what you can do, you can simply add 4 waves. I'll explain to you why you do add 4 waves and not 5 or 8, but simply 4 in a couple of seconds. But first, I want you simply to add 4 waves. So you do 3 plus 4, which equals to 7. And the second pattern you see is the 7 pattern. 1, 2, 3, 4, 5, 6, 7. So you have 7 patterns in the second wave. And you can label it an ABC. So it's the same thing as the first pattern, an ABC, but in the second pattern, you see the subdivision of the A wave because the A wave subdivides into A, B, C. I hope you can follow it, what I'm saying to you. That you get the B wave, and then you get a C wave, which also subdivides in an A, B, C. So what I want to tell you is that the second pattern, you can see it as also a simple zigzag, or you could call it a double zigzag, because it's composed of an ABC, like the first pattern, then a corrective X wave, then again an ABC. Okay, so you could call it easily a double zigzag. And now I've labeled it as if it was a simple zigzag, but you could label it as a double zigzag. In that case, instead of the B, you would write an X wave. And you would simply consider the first wave, the first zigzag. Then you would consider the linking wave an X wave, and then you would consider the last portion of the correction zigzag. You would call it the double zigzag. Then you would have, say, 7 waves. And now, if you add 4 again, I'm not showing the last pattern on my chart because it would take too much space. But if you add 4 again, you go from 7 plus 4, so you would get 13. So if I would draw you a declining 13 declining waves, it would be a triple zigzag. But it's still the same thing. It's still a zigzag. Okay, it's just giving you more subdivisions. And the 13 waves, you can also simply label it as 1 zigzag. You can label it as 3 zigzag or as 1 zigzag, but it has the same message in it. It's still a zigzag. So a simple zigzag, a double zigzag, or a triple zigzag convey the same message. They're all corrections. I wanted to tell you that. And you might ask, well, why do I add 4 waves? It's simple, because if you go from 1 wave and you add 4 waves, you get 5 waves. So here, as I showed you 1 wave, and if you simply add 4 waves to it, 1, 2, 3, 4, you get a 5 wave. Okay, and that's now the definition of an impulse wave. A 1, 2, 3, 4, 5 up. That's an impulse wave. And if you add 4 waves again, you get 9 waves. And that is still an impulse wave. It's just giving you more subdivisions. And the series of numbers like 3, 7, 13, you can do it to infinity. It always will convey the same message. The same 1, 5, 9, and then wait, 9. I'm sorry, I'm counting it wrong. It is 9, and then you get 13, because 9 plus 4 makes 13. But I did make a mistake by counting on my chart. So let me correct that. If I can erase, how do I erase? I'm not seeing my eraser. Here's the eraser. Okay. Now let me. Okay, I have to erase all that. Let me write it again for you. So 7 plus 4 equals 11. Okay, not 13. 11, and then it goes on to infinity. You do 11 plus 4, which will equal 15, but it goes on to infinity. And 5 plus 4 will equal 9. And then it goes also on to infinity. After 9, you will get 13 and so on. So that's what I wanted to explain to you. So there's so 1 wave or 5 wave is the same thing. It's still an impulse wave up. And 3 wave down or 7 wave down, it's the same thing. It's still a corrective zigzag. Now I'm talking about this because yesterday I was looking at my chart, and I told you that I'm looking out for a double zigzag. I don't remember if I said the word double zigzag, but that was what I was looking out. That was what I was expecting. And we take a look at the chart and I show you that right now. So let's take a look at the chart. And this is the correction I saw. I think I saw the entire correction, and I was expecting a double zigzag. So what I did see yesterday, while I did make my intervention, was the entire correction from. I'm not sure if I saw the entire up wave here, the wave 1, the labeled now wave 1, but I saw the entire correction from wave, I think at least. or if I don't, it's still important that you get what I was saying and what I meant. What I meant is from wave 5 to wave 4 of C. I saw that correction, and I did label it an A, B, and C. So it's the same thing that I just show you on the chart. Okay, and after that correction, the A, B, C, I was expecting an X wave. So I was expecting that this would be an X wave. And then I was expecting one more ABC down. So I was expecting a double zigzag. And that did not happen. What did happen was that we traced a wave 1, which subdivides into 5 waves, 1, 2, 3, 4, 5. We did trace a wave 1, and then we did trace a wave 2. And right now I'm labeling the wave 2 W, X, and Y for wave 2. Okay, and that's what we traced out. And if you pay attention, I have a diagonal, an ending and diagonal here, which are traced like this, where wave 4 enters in the territorium of wave 1. So you have wave 2, 3, 4, and 4 enters clearly the price territorium of wave 1. So that's an ending diagonal, and I see one more here. That's why I put the lines on top of it, because I see two ending diagonals. It's not really important, but I just wanted to mention it. And after the correction, after the from wave 1 to wave 2, we did get now a third wave up. I haven't put it on the chart right now. Oh, yes, I did. I did put wave 3 here, wave 4 here, and wave 5 here. And now we are correcting the impulsive 5 waves up. This can count as wave 4 because it does not enter the price territorium of wave 1. Let me just check if you say how you say it in English. In French, you say, let me check. So I'm just going to ask Bixby, ask my translator to translate a word from French to English. Territoire. No, stop. Just a second. Sorry for the delay. Territoire.
Pope series.
Okay, he doesn't get it. Sorry, I can't help you. I have to check it later. It would waste too much time me checking it now, and my translation app doesn't work correctly, so I'm wasting your time. Anyways, and the zone of the first wave. Let's say the zone of the first wave. That would be proper English. So wave 4 does not enter the zone of the first wave. I would say territoire in French, but territorium in English. I'm not sure that the word exists, and I wanted to check it. But anyways, it's not that important. It does not enter the zone of the first wave. So you can label it a wave 4, and then you get a wave 5 up. And now we are correcting the 5th wave. So I'm expecting us to make an A, B, C, which will also be a zigzag. And I'm expecting the zigzag to find support at the bottom of wave 4. So I'm expecting us to go down up to there. And then I'm seeing higher prices. To talk about higher prices, let's switch to the 3-hour chart. And as you can see, I did also a relabeling here. So yesterday, I was expecting, I'm telling you the same thing again on the 3-hour chart. I was expecting a wave 1, X wave correction, and then a wave, and then a C wave down. If you want an ABC, which is also, as I told you, 3 waves equals 7 waves, which is also a double zigzag, because the first wave down is 1 zigzag, as I showed you here. So this is 1 zigzag. From here to here, you have 1 zigzag, okay? And if we would have gotten then an X wave, and then we could have gotten 1 more zigzag down. Okay, but we did not. So if I go back, so that the first one was a zigzag, then I expected an X wave and then 1 more zigzag down, because I was expecting us to reach the 0.382 Fib retracement level, but we only did reach the 0.236 Fib retracement level. That's something that happens. So the fourth wave, from wave 3 up here to wave 4 down, was really brief, short. It only went, it was only a little zigzag, and I was expecting a double zigzag. So I was expecting an X wave then, and then 1 more wave down, or I probably told you a simply an ABC, because a double zigzag is the same thing as an ABC. I've tried to explain that to you, and normally, if you followed my train of thought, you should understand it now. You can play with that. You can draw on a piece of paper 3 waves and label it an ABC, and then you can draw 7 waves and label it again an ABC or a double zigzag, or you label it as a double zigzag, and then you can draw 11 waves and you can label it as a triple zigzag, or again a simple zigzag. It's the same thing. They all have the same message. They all convey the same message. So now let's talk about trading. Since we did accomplish wave 4 for my new outlook at 0.236, and we are now in the process of accomplishing wave 5, I went long again. So I changed my opinion and went long again. And you get that information a little later, but you still can go long, and you still can go long at a good price, because right now we are accomplishing a zigzag down, which will correct the impulse wave up, and you can go long whenever you want. If you're patient, you can go long at the bottom of the zigzag. At the when the bottom of the C wave is reached, you could go long for the 5th wave up. So after having done 3-4, I'm expecting a wave 5 up, and here I have the wave 5 at 68K. But we will talk more in the coming sessions about my target for wave 5. Let's now accomplish the 2nd wave down, and then we'll see about the target of wave 5. When you are trading, you must be patient. So you could ask me why I did go long and I did not go short. As I told you yesterday, I did not go short for the 4th wave, even though I expect us to reach the 382 level, because I thought there's not too much space. We were around here, and I thought there's not too much space to the downside, so I was not really eager to go short. But then the price developed in a way that I was not expecting in my forecast, but it's fine. I mean, when price give me new information, I'll change my forecast. It was expecting in a different way, and we did get an impulse wave up. So a 1, 2, 3, 4, 5, and while we were developing that, the key levels indeed break, and I saw that we are not accomplishing an X wave, but that we are impulsive again. So Elliott wave told me to go long, so I changed my opinion and I waited just for the Fisher to tell me also to go long the triangles below the triangles below my candles. When they went green, I had the confirmation that we were starting a new impulse wave up, and I went directly long. For my stop loss level, the best stop loss level you can have is the 45.21, because we cannot enter the price zone of wave 1. So from here to here, we cannot enter that price zone. So that's the best. 45.21 would be the best stop loss level you take. I take a closer one to the price, because I'm taking a heavy leveraged position, so my stop loss needs to be closer to the price. So I took the 53,909 level as my stop loss level for my last trade, where I'm expecting us to accomplish wave 5 up. So since now I think we did wave 4 down, I'm expecting wave 5 up, and I went long for that wave up move. And you can go long the same, even if you enter the even if you enter a little later, you still can go long at around the same price that I did, or even better, because you can wait for wave C to accomplish and then go long. As soon as you think that wave C is accomplished, you can go long. You know that wave C has subdivided into 5 waves: 1, 2, 3, 4, 5. Okay, 2, 3, 4, 5, and then it's over. So you can look, you can follow it, you can track it, and go long whenever you want. Okay, that's all I actually wanted to tell you today. Yes, so I had somebody asking me to make a third intervention yesterday, and I could not manage to do a third intervention yesterday, and I'm not expecting to make 3 interventions a day. I'm planning on doing 1 intervention right now, because I find it fun to talk about the chart and to read your comments. I enjoy reading your comments; they are quite motivating. But sometimes I might make a second intervention if something happens, or if I find the time or for it. I might make a second intervention as I did yesterday, but that is it's an exception case. Most of the time I won't, because trading is a psychology game. So to be a good trader, it's like winning an Olympic medal, Olympic gold medal. There are very few people who manage to become good traders, because psychologically they can't manage the trading stress, the stress that is involved in trading. So I have to keep my balance, and I won't keep my balance if I spend, let's say, 10 or 15 hours a day looking and talking about charts. I find it really passionate. I really enjoy it. I'm standing up in the morning and looking forward for the intervention I do. But if I do too much of it, it will be too much and I will lose my balance and I will feel less good. And if I feel less good, then I will trade badly. So I have to take a great importance to my psychological and also my physiological health. So there are several things I do. For example, every day I go jogging and every day I meditate, which does me some good, especially for the stress, so that I get my stress level down. And then I also play the piano. So I have to take a couple of hours a day for playing my instrument. And I'm writing right now, and I'm in the process of publishing my second book. So that also my second philosophic book. So that also takes some time. And once I publish my second book, I'm already writing the third book. So that also takes some time. So I'm just telling you that I cannot spend the entire day just looking at charts. I need to do something else. I need to go outside. I need to change my ideas. I need to think about something else and do something else that I enjoy. I really love trading. I'm really passionate about it. I find it extremely interesting. That's why I do these videos, and that's why I talk to you, and that's why also I reply to your comments, because they're interesting. Yesterday, for example, a person asked me, I don't remember his name, sorry, I should promote his name, but a person asked me when I would know that the B wave is over of the zigzag. That was I was talking about. And I told him when we traced 100% from the start. And then he asked me to do a video about it, but I could not manage. I already did two, and I could not manage to make a third one. Yesterday, the entire day, I was late to my appointment because I did a second intervention. So I really enjoy it, but for my balance and for my psychological health, I cannot overdo it. So one intervention, that's already a lot. I don't know any trader who does one intervention a day. And I have done it now, I think for, let me check. I've done it now in a row for 26 days, or maybe a little less, because once or twice I did two videos a day. But I have done it for more than 20 days in a row without taking one single day off. And if I remember, I'm never sick. So during the last 20 years, I didn't catch a cold or was once sick. So I'm never sick. So I can keep up with that level of intervention once a day on the long run. But I still need to pay a huge attention to my psychological health and my physiological health. Because if I feel bad in my body, then I will trade badly. So I have to take care about all the rest of stuff that I enjoy and that I want to spend my time with. I cannot just look at charts for 15 days, for 15 hours a day and comment them for you. I mean, I'm not a machine, I'm a human being. So I need to change my mind. I need to have other occupation and other habits to spend my time with. I hope you get that. So I expect one intervention. Really occasionally you could see a second intervention, but don't count on it. Expect one intervention, and I should be able to deliver that on the long run. I should be able to do one intervention a day, and that's more than enough. That's more than enough if you want to trade along my side. Because even if I entered the long position before you did, let's say you waited for my confirmation and you didn't want to go long until I told you that the fourth wave was over. Even if you waited, and even if you see this video now or in 1 hour, it should still be the perfect time to go long for the fifth wave. So don't worry about it. And don't forget your stop loss level if you go long, because you always need one. And one last thing, you should not, but trading is extremely risky business. So I'm expecting to be wrong. I was right on my last short trade, and I was right on my last long trade. So I was right twice in a row. And now I'm entering my third trade, and I might be right or I might be wrong. But I'm expecting to be right 3 times and to be wrong 2 times. So I'm expecting to give you wrong forecasts, and I'm expecting to lose money on my trades. I'm expecting to lose money twice, and I'm expecting to make money 3 times. That's what I'm expecting. So you should be aware of that. And I make money because in that case, everything is fine. And I developed a business that will make me a lot of money because I'm more right than I'm wrong. And also I expect my winning trades to make more money than I will lose in my losing trades. But that's the second thing. Anyways, I think I talked enough for today. I'll see you tomorrow for one more intervention. Please comment. I like reading your comments. Subscribe and hit the bell notification icon, because you should get those interventions as soon as they are out. So hit the bell notification icon, then YouTube will notify you every time I publish an intervention. Have a nice day. Bye-bye.